In this video, we're going to talk about one of the most popular investing strategies out there, investing in the stock market. I know buying stocks can be a little bit intimidating, especially if you're new, but the more you learn and the more research you put into it, it is an effective way to grow your wealth. Today, I'm going to walk you through how to invest into stocks as a beginner. And to make it a little bit easier, I'm going to make it into different steps to walk you through the process. Hey, what's up guys? My name is Jason. This is a penny pincher's guide to personal finance. Consider hitting that like and subscribe button if this video does give you some good information. So let's jump right into the video. All right, so the first step and the most important one is to understand what a stock is and how it works. Knowing the basics will help you start investing so that you can start growing your money. A stock represents a share in the ownership of a company. And when you buy a stock, you own a small portion of that company. And that value of that stock will fluctuate based on that company's performance and their overall market factors. All right, the next step is to focus on what your overall goals for this investment portfolio is going to be. Are you looking for a short, quick buck, or are you looking for a more long-term gain with these stocks? Now, your investment goals will determine what type of stocks you'll be investing in between the long or the short-term type of stocks. For the most part, I would recommend that you would focus on a buy and hold strategy because those have been ones that have shown to have the best benefit and the best growth over a long period of time. Now, this is one of the most tried and true strategies out there as long as you're buying solid stocks that will continue to grow. For what I would recommend doing for this particular part would be to look into some of the brands that you love to use on a daily basis that everybody around you loves to use and start investing in those because those are more than likely a very solid company that will continue to grow because you like to use them and you can continue to buy their products. All right, so the next step, once you've already determined what your investment goals are, is to start doing the research to know which stocks to start buying. All right, once you've done some research, you should be looking into companies that have strong financial performance, they have solid management, and they have strong competitive advantage over their peers in the industry. You should also look into the company's market trends and their company's industry to see if they have a continued earning potential in the future. And this is really where it comes down to the nitty-gritty to determine which stocks might be best for you because past performance might not mean that the future will also be just as good. And so making sure that you don't just base your decisions off of what you see in their history. The more you know, the better informed decisions you can make and the better investing you can do. Once you've done your research, the next step will be to just pick that stock and start investing in it. Now, I do want to remind you that you should be diversifying your portfolio and finding multiple stocks in a breadth of industries so that you can make sure that if one industry goes down, your whole portfolio won't drop. By diversifying your portfolio, this will help mitigate your risk and give you an overall increased chance of success and growth in your money. Now, by doing this, you should look at what type of risk you are allowing yourself to have. So if you are a young person that is investing, then you might have a little bit higher risk tolerance. And if you're older or getting close to retirement, then it's going to be a little bit low risk tolerance. Determine your risk and then start investing into it accordingly. Now, the degree of risk is going to be dictated on your financial and your age. There's a lot of different factors that go into it. So find the one that works best for you and start adjusting your portfolio to meet that standard. Now, as you grow and you get a little bit older, that risk tolerance will change and you'll have to change your portfolio to reach those risk levels that you're at right there. All right, so now you've done your research, you've identified your risk level, and you've also found which particular stocks that you want to invest in. The next step will be to open an investment account with a brokerage firm or some of the great investment apps out there and start putting that money into the stock market. Now, there are many different investment firms out there, many different investment apps, but not all of them are created equal. Some of them will require a fee on a monthly or yearly basis, and some of them are free. Some of them will allow you to do fractional shares and some of them won't. So you need to do some research to find out which one is best for you. I do have a video that goes through some of my favorite investing apps for beginners, and that will be linked up at the top of this video as well as at the very end that you can click on to kind of learn a little bit more about it. I would recommend focusing on any type of investment firm or app that is free that also allows you to buy fractional shares as well as has a learning platform on it so that you can start increasing your investing knowledge and also increasing your wealth. And then the next step, once you have found that investment firm, is to go ahead and make your first trade. Now, you can go and make a trade, but what I would recommend doing is potentially moving your idea to an automatic investment portfolio instead of just making trades as you see fit. This will remove any of the emotional aspect of investing, and then you'll also be able to just kind of forget about it and continue to build and have that compounding interest, that increasing wealth over a long period of time without you having to worry about it. Now, this is what I do, and I don't have to think about my investments on a monthly basis. And for the most part, if you're looking at mostly just investing into a total stock market index, or if you're looking at a broad market or stocks that just kind of fit into a multiple different industries, then a lot of times these will actually beat out a lot of the big hedge fund managers out there. That's something that I do, and I think it's working great for me, and something that you should start considering. And once you've made your first buy and trade of these stocks, then I would start recommending looking into a way to monitor your performance with your stock portfolio. Now, there's no rush into buying or selling or making adjustments, but just a way to make sure that you know what's happening with your investments and with your money, so you can make smart and educated choices in the future. Now, if you are monitoring your portfolio and you do notice that there needs to be an adjustment to your automatic investing, or you just want to change how you are investing on a regular basis, then that's perfectly okay. Determine if you want to do a long or short-term capital gains tax, and then move forward with that plan. Now, we will cover exactly what long and short-term capital gains is at a future video, but just stick around for that. So those are my quick tips on how to start investing into the best investment option out there, stock market, to help grow your wealth. Remember that the stock market is one of the best ways to get long-term wealth, but you have to make sure you do your research as well as you invest wisely to make sure that you're not just going to be throwing your money out there. I hope this helps remove some of the emotion associated with investing and really makes you go into the research and the analytical side of things to find the best investments out there. If you do have any questions or you want to see additional videos in the future, then go ahead and leave a comment down below. And as always, I want to remind you that we are here from your first penny to your first million. We'll see you next time.